Hello, traders. Good afternoon from Sydney. Um, I'm creating this video to share with you more of an in-depth understanding of how it is I trade. Many of you have been asking me for examples, and this one I believe is the perfect setup. So I'm going to get rid of these lines that I have on screen, and then I'm going to share with you what is it that I look for, how I draw my lines in, how I'm looking at executing a trade, time of day, all of those things. Now, this is the Asian session. A friend of mine, someone I trade with, wanted to do some trades for the Asian session, and so we jumped on, and I was just showing him my method and an understanding of what I'm looking for. Now, firstly, when I turn on my charts, I look at what the overall market has done. All of this stuff here is the New York session. This is from last night, and then I'm looking at somewhere around where the Asian session would have started, and it would have been somewhere around here. Okay, and I'm going to apply some knowledge in relation to what I did in the previous video of taking into account where the Asian session started, where it established its high, low, and the trend, and how you would start to notice that. I'll come back to that in a second, but this is how I actually take the trade. This is how I search for it. Okay, so when we turn the charts on, price was actually at this point here. It had established its now let me zoom in so I can show you this. This is a very tiny doji here. Um, Price was here, and so I believe it was still uh, in the last couple of minutes of that candle, but it had very nicely established a shadow and a wick up the top. Now this is what I did. I paid attention to the previous candles. I looked to see that prior to this, for the first few hours, the market had been trending. And then over here, it started to consolidate slightly. So I looked at these two candles. I realized that here somewhere, there is that invisible barrier. For whatever reason, the market is not pushing up or moving up. And I noticed also that price had hit this bottom point, and then I looked across to see if there were any points other than just that one. And yes, you look at the bottom body of this one where it came and stopped around there. Notice also that price here with this white or green candle in your case would have tried to test beyond this line. It did, created a bit of a shadow and then went back up again. So here's what I do initially. I'll get my horizontal lines. And by the way, before I draw them in, this is the sort of scenario that I'm looking for. So if I don't see this on this particular chart, I'll jump onto another one to see if I can see something along these lines. Okay, so what I initially did was I took my horizontal line, drew in a line at the very top of this, and then I'll draw another one in at the bottom of this. Okay, that gives me an indication of where price has traveled throughout the duration of this candle. So when this candle then started, I know that I've got a 15-minute duration, or at least a 10-minute duration before my broker locks me out in entering that trade, that I have in order to analyze and in order to execute my trade. So what I did was I drew my lines in. I went across towards the left to see what else price has done in relation to these two lines and these two spots. And I noticed, okay, these two right at the tip, it's hit. I noticed that the body of this one started, tested higher, couldn't do it, came back down. And then this one as well, this green candle in your case, where it would have possibly reached that level. And then these ones here. See, notice how this, and this use that very line as a support. Now what I can also do, I see this one here, the body of this is slightly above my line. Now with all of my trades, I like establishing a buffer. So whether you have a support line or a resistance line, what I would initially create is the first line would be what I call a trigger line, and then the second line that I draw in would be my buffer line. So where I choose for this to be is possibly at the top wick of this one. And again, you decide completely when it is that you want to place it. Now, I can also move this if I wanted to, so I could match this one, these two candles here. But I realize that the body of this is hit as well. It gives me a safe enough region for these two here. So by this buffer line, this is what I'm thinking. I'm thinking if this candle goes up, hits this, I'm not really too certain or guaranteed that price is going to fall back from this point. Chances are it can actually just come and sit very firm along this line, or even try and match this bit here. Okay, then what I will safely say is then I'd like to then put in a buffer area. So if price breaks this line, goes higher up, then it'll be somewhere close to this line or on this line that I would consider executing a put trade. Okay. The other thing that I want you to take note of in these sorts of situations is where the middle Bollinger Band is. Because what you're going to find, like is the case of this one here, where price will most likely hit the middle Bollinger Band and then bounce back off. Okay, I'm going to show you some other examples. I believe I saw this on the USD JPY. Notice how, see here, it's a downtrend, a strong downtrend happening. Now, look at this. Look at this candle here. Price goes up, hits the middle Bollinger Band, bounces back. This one goes close to the middle Bollinger Band, bounces back. This one goes and hits the middle Bollinger Band, bounces back. What you're going to find, like keep going across your screen, you're going to find the behavior of candles around here. This one here, this, even this one here. Look at this. Action strategies will take into consideration how candles and price behaves around the middle Bollinger Band as well. Okay, so and you can keep looking for them. See this here, all of these ones have used the middle Bollinger Band as a support line, a curving support line. So you could do the same thing. So in my case here in this strategy, I've done the same thing. So I'm looking at what price is going to do here. If it doesn't respect this line, then I'm thinking chances are it will most certainly respect this middle Bollinger Band and this buffer line that I've drawn in. Okay. Next thing I do, I quickly uncheck these two buttons up here. And the purpose for that is that so I can scroll back on my timeline and see what else my lines have done. Now here's what I find. This is what I like. Notice how my trigger line, price for whatever reason completely respected this. Yes, price action did break down here, but the body of it respected it and went back up again. This is what I like to see. These three instances, that one, and that one there, where price completely respected my zone. I can keep going back if I wanted to. Actually, by the way, this is somewhere around here is where I did my previous video. So once I've seen that gives me, and even here actually, this one here, this one here, this one here, this one here, 4 more candles. So there's a good 8 instances, this used it as a key support. So 8 instances that I found where price completely respected that area. Okay, and then when I come back to, okay, click these buttons again. When I come back to this point, I very quickly see this here as well, completely respecting my zone. So that's 11. This one here, 13, 14, 15, 16. 16 times price has actually respected my the area that I drew it in. Now, just so that I can make this more tighter, I can consider moving this slightly. So we can probably move it, make it a more tighter fit. And what that means for me now is that if price touches this, breaks it, I see it somewhere in between here, or even possibly just going slightly higher, it's almost a guaranteed put for me. Okay, that's what I'm looking for. On the flip side, if price was to come down here and break through this line or even touch it, I would consider doing a call here. If I wanted to add a buffer, I can most certainly do that and say this sits at the body of this. Let me create a buffer at the very bottom of this. So if price does something along these lines, and here's a great example of it. Say, for instance, price comes down, hits my trigger line, and then I'm thinking, yes, I should execute a call. You will have instances where the price may hit it, you execute your call, price bounces up for a brief moment, even for a few minutes, but maybe, say, in the last minute or so, something pushes this back down again. And you have this situation where not only has it hit that line, it's slightly gone over the top of it. So say, for instance, your strike price is on the line itself. What you're going to find is you lost that trade, possibly just by a few micro pips. So what we do in order to avoid it is to establish somewhat of a buffer zone. And so what I mean by that is to say, if in the case of, say, this one here or even this one, if it comes and hits my line, well, my eyes are open, it's got my attention. I would, in order to execute a safe trade, I would want it to go past my line, either come very close to this line or to hit this line in order for me to say yes and then to execute my trade. Again, reasons for this, reasons for why I established the buffer zone when I'm trading binary options is I don't want to have heart failure, especially when my goal is to invest $500, $1,000 or more per trade. I do not want to have heart failure just because of a silly mistake. And two, it's where the buffer zone will stop you from making a lot of mistakes. Because for a lot of people, as soon as price comes somewhere near here, they will start executing trades. That will more often than not cause you to lose trades because in this situation here, price may come, hit, and then sit very firm on the line or above the line. Okay, avoid that at all costs. Now, what my friend and I did, we established these lines and then we watched this white candle for the duration of that remaining 15 minutes. Now, notice how it came. It came very close to hitting our initial trigger line, but it didn't. And see, at the bottom went nowhere near our support line. What does that mean? It means we did not take the trade. Having a look at this, you can say, well, hey, Shiva, you could have taken the trade and you would have still won. Yes, I could have taken the trade and I would have still won, but what's important here is that I did not lose that trade. Okay? You will find opportunities that after the fact looked amazing or do look amazing. You don't have to push yourself and take the trade. And here's where I'm saying the perfect setup. This looks like a nice setup, but it's not the perfect setup that I'd like to waste one of my 2 or 3 trades on. Because chances are, how it finished off in that way may not have finished off in that way. And so chances are I would have possibly lost that trade. I don't want to take losing trades. And here's the difference between having maybe an 80%, a 90% strike rate, or a 100% strike rate. And a lot of people are asking me, how is it possible to have a 100% strike rate? Well, this is how. You don't take these sort of trades. You don't push the boundary. Okay? So unless price comes and meets and hits your zones and your points, including both your trigger and your buffer, you don't take the trade. Simple as that. Yes, it's going to test your patience because we sat there for a full 15-20 minutes or so looking at that before I turned my charts off and we said goodbye. And you can say, well, that's 15-20 minutes wasted. No, I didn't actually waste those 15-20 minutes. I understood myself in a deeper, more spiritual level because one, it allowed me to control my own um, impatience. It allowed me to practice being more patient. It allowed me 15 minutes to have a deeper look at the charts and to see what's going on, and to recognize its movement. It allowed me to sit back and be and remain completely in control of my own emotions and say, I'm going to let the market do whatever the market does best, and I'm going to wait for the market to come to me. And where it's coming to me would have been these 2 points, because I've seen the market behave a certain way around there, and I'd say if it wants to come and repeat its behavior like a good boy, good girl, then I'm ready to play. But if it doesn't, then it's my choice whether I play the game or not. Okay? If you can get this mindset happening, if you can accept it, then you're going to become a very, very good, consistent trader. But if you're going to struggle with this concept, then chances are, and I say this to all of you, that this is the greatest battle you're going to face when it comes to trading. If you can put some effort into consciously getting over this struggle, if you can understand it and know that if you're hungry and someone's dangling a carrot in front of you, you don't have to bite into that carrot. It's your choice whether you take it, you bite it, you grab it, or you don't. In this case, it's the same thing. The market's doing what it's doing. It's not fighting you. It's not luring you towards it. It's not saying, hey, you're not going to have any fun if you don't take a trade. You sit back and you say, you do what it is that I want you to do. And if you don't do that, well, I'm not going to play then. Okay? All right, that's enough I'm going to say about that. So I want to then show you what the market did after that. I turned this off. I left my lines there, came back... I think about 15, 20 minutes ago. And then I realized what the market had did with my line after the fact. See how in this case, with this red candle, market went close to my trigger zone for resistance. I wasn't there to trade it, but mind you, I wouldn't have traded it simply because it didn't go close enough. Now, if it would have hit my trigger line, I most certainly would have traded this one. Two reasons. The first one is that there's the middle Bollinger Band here. Second reason, I know that the Asian market today is going to downtrend for the next, from this point on, for the next maybe 5 hours or so. And I'll explain again in a little why, how I knew that this is going to downtrend. The other thing is, notice how this candle, it not only hit my trigger support area, but it also went past my buffer area. Now, this is possibly one I would have traded. I would have done a call on. Why? Because it went, not only hit my buffer zone, went past it. Now, if this would have been within that whole 5 minutes before my broker locks me out on the trade, I would have executed a call on this, either on this buffer line or slightly below it. And for how long? It would have been for the remaining duration of that 15 minutes candle. Okay, now look at this candle here, and I think a lot of traders are making the mistake with this sort of trades. Notice how this is a red candle. Notice how, because the body of this finished here, this one started here. This is way too close to my existing support and resistance lines in order for me to trade this one. I would not be trading these guys at all. Absolutely. So what I would suggest here is you establish a new support line. And the point that I'd be looking at the very least is the absolute bottom of this one. Okay, notice how as soon as I draw in the absolute bottom of this one, you realize that the body of this one comes and sits right on this line. Okay, so if I was to say this candle is coming down, where would I trade it? Well, this would be my trigger line now. But in order for me to trade that, I would say I need to establish a safe buffer zone. I don't have an indication anywhere around here for a safe buffer zone. I could go back and see if I can find one. Or what I would do is to say, okay, let me see if I can draw in a buffer zone. And I could just use the the crosshairs of this. You know, so you see that bottom part, the actual plus sign, the bottom bit of that one. I could just use that. Now, notice how I've given it some space. I can make this bigger as well. But if I would have then traded here, chances are I would have won this trade, but it would have been a close one. So in this situation, where you don't have any point that you can see comfortably that the charts are showing you can be a safe buffer zone, you either do not trade that at all, or you create a decent buffer zone. So go ahead and put in a bigger one. And in this case, yep, you would have still won this one. I personally would not have traded that candle at all. Again, I don't know what's possibly pushing price down here. I don't know where this is going to stop. This could so easily have come down and hit this Bollinger Band down here. This could so easily have come down, and for whatever reason this dynamic trend line is created, it would have hit somewhere down here. I have no idea. And this is what I'm saying to all traders. If you don't have a reason behind why you're drawing in those points, market doesn't have a reason either. So it doesn't actually have to stop there. It will keep going. Don't take the trade on that. So in the morning, during the Asian session, I could have reasonably taken just that singular trade. That's all I would have done so far. Notice how, let me get rid of this buffer one that I've created. Notice how many hours later on, I left these lines in place. Many hours later on, what's this? This is probably about an hour and a half, and this is about 2 hours later. Notice how price then comes back up somewhere near the zone. These are all zones. Remember, this is not specifically just a support and resistance line that I've created. Notice how price actually does honor these points. When this starts to happen, you start to realize that your decision to use those lines as support and resistance zones was a good one. That's accurate. Okay, so I hope you guys now have a better idea of how I trade this strategy and what you're actually looking for. Let me zoom out, and I'm going to share with you what I promised earlier. In my previous video, I shared with you a little bit of knowledge about how to understand how each session works and how market makers actually have an impact on that. Remember how I said that the role of the market makers, there's different phases that they go into, accumulation, distribution, all of that. And what you're looking for is where the market makers in the first few hours will possibly try and establish the session high, session low. And then once they have done that, what you're looking for is the market to most likely consolidate for a brief period. Now, in the session high, session low bit, more often than not, what you're going to find is the release of all the news for that market or whatever is going to impact that market. Now, with that, this tends to happen within the first few hours of the actual session. Following that, what you're going to find is maybe an hour, hour and a half, maybe 2 hours worth of consolidation happening. Okay? What then happens is, after the consolidation phase, the market is going to move towards either an uptrend or a downtrend. Okay? Once that happens, you know that the market's going to continue on trending in that direction, most likely for the remainder of that session. So say for instance the first part here, now I believe this is somewhere where the Asian session started. So say for instance with the Asian session, market's gone ahead, established its high here, and then I'm going to draw these lines in, and then gone ahead and established a low here. This happens in the first 1.5 hours or so. Okay, I'm going to get rid of these lines here so you guys have a better idea of what you're looking at. Now with these lines, you can, once you've drawn them in, you can leave it there for as long as you like, because what you find, as I've said earlier, when I was explaining this area down here, that price will most likely come back and respect those zones again. So not particularly the lines, but the zones, and that's why it's necessary that you actually draw in your buffer area. Okay, so notice how here it's established a session high, here establishes its session low. Market goes into a degree of consolidation, and then, and this is what you're waiting for. You're looking for signs of a direction in which the market's ready to to trend in. One thing you could do is start drawing in boxes, start drawing in triangles. You see, you could use this as a triangle, like shapes. I don't want to get you into that for the time being, but that you could utilize as like breakaway trades, and most traders in forex actually do that. But for the time being, let's not do that. But what you're looking for is a breakaway. Now, here you could start utilizing this and say you got a daily high, you got a daily a session high, session low, and then the market attempts to break down from your initial session low. Okay, market breaks, goes sideways for a bit, and then breaks again. By now, you've got a bit of an idea that most likely the market is going to trend down, and when it does, this is going to be a trend down for the rest of the day. Okay, that's what you're looking for. Apply this awareness towards the London session and the New York session as well, and you'll start to see a clear idea of what there is a clear pattern that the market follows every single session. It may not be the same sort of pattern, so it doesn't necessarily mean that the Asian session is always going to head south. It means the same sort of scenario will happen, and you might even see it head up north and establish a uptrend. Okay, before I close off, notice here without my lines drawn in how when the market came down, it started to establish its downtrend. It's respecting the middle Bollinger Bands. Okay, so here price goes up, hits the Bollinger Band, comes back down again. You could probably disregard these two here. This one came close, this one came close, this one came close, so did this one. This one went up, came close as well. Okay, start paying attention, guys, to how price action behaves somewhere or anywhere around near Bollinger Band. It will use it as a support and resistance line as well. Okay, so I think that's it. That's all I wanted to say in this regard. If I can jump into... Yeah, again, I think I've already covered the points about how price behaved with Bollinger Band here, or the middle Bollinger Band. And in regards to this as being one long Asian session, downtrend, daily high, session low, and also how I look for trades. Like I'm looking for this sort of behavior to happen. In this regard, I would have been able to pull out at least one trade. That might have been enough for the day. How long did it take me to notice that? I'd say maybe 2 or 3 minutes. That's all I wanted to spend. Now, if I would have looked at that and I didn't see this behavior, or this behavior, I might have jumped onto a different chart to see if I did see that sort of behavior. And if I did, then I most likely would have drawn in my lines and see if I could have done something with it. Also, keep in mind that when I'm talking about familiar behavior, and I'm talking about this sort of stuff where market's going sideways, we're looking to see if the candle that's coming is going to behave in the same way that the candles that have already come have behaved. That's what I'm after. That's all I'm actually looking for. This is where whatever you're familiar with will result in what you want it to do. Okay, that's about it, guys. All the best with it. I hope this makes sense.